Tuesday, March 21st, market analysis. Stan Ehrlich, good morning, 10 o'clock California time, almost. I always start out with the indexes, the overall market, usually the spider, and I'll do the same this morning. On the left-hand side, you get a 15-minute chart, and it basically shows you in some significant detail the last significant break. From the beginning of February, when we got overbought, on the 15-minute chart on the left, that's the same yellow bars over here on the right. So you can see that we've zigzagged our way down. But today is a higher high than the last 7 days, and a very possible, I would say probable, close above all of the last 7 days as well. That is usually a breakout or bullish, and you're going to get a little follow through from that and a retracement. Now, a problem. There's a gap this morning. We gapped up nicely. I think 3 1/4 higher from the previous close, and the gap from yesterday's high to today's low is still there. Now, what it did do is it came down after the opening and got back down to the high of the last 7 days and tried to hold, and it sank a little bit more. Now, at the moment, we are looking again at the 15-minute chart on the left, trying to recuperate from the lows, but no higher high in a very short term, 15 minutes to hourly basis. And if we can continue to climb from here, all is well and good. But gaps are almost always closed. Remember what I say. They're like a black hole in space. They tend to suck the price action back into the gap. So coming down to yesterday's high is not at all out of the question. Would it be a good place to buy? Frequently, yes. And it's also got a little extra support because it's almost the same price level as the day before. So 94.50, 394.50 is a possible. Now that's less than 2 points from where we are right now and could still happen today and right back up again next 3 hours. If it's not closed, you got to be careful about it being closed in the next few days and not get overzealous about bullishness. So we've got a little circumstance. Are we going to close the gap and not go much further? It doesn't have to be exact, although sometimes it is, and then go back up. So once you close the gap, if we can, you got to watch pretty carefully to see if the damn thing doesn't stop dropping and starts to turn around, which is exactly what you would normally expect. But again, it can come down a little bit further, which wouldn't do any damage to the overall situation. We just don't want to get below pretty much yesterday's low at this particular point, which still is a lot of gain from the bottom we've had. I want to point out that we got oversold at 380.5. Today's high is 398.5. That's a pretty darn good rally in about a week or so, a week and a day or two. We're not overbought. I love that. There's lots of extra upside room, but you could fiddle around a little here before you make new highs. Bull markets like to climb a wall of worry. Bear markets panic and collapse real fast. So it wouldn't be uncommon to see us fiddle around, close the gap, and then go back up. It doesn't have to be today. And there's a less likelihood that a gap is going to be unclosed. So I'm pretty much expecting that and planning for it to a degree. But we are bullish, period. I like the way it's acting. Nothing wrong except for the gap, little problem. Let's go look at the DIA. Spent too much time on that one. Okay. All of the indexes I follow, including the 2000, have a gap to close except for the Qs. We'll get to that in a moment. DIA gapped up near the low, has a little bit further to come down to close the gap. Don't want to go too much further than that. The low key here is below yesterday's low. You don't want to do that. That would be not good. Bearish engulfing. So next chart, Qs. Now on the way up in this bull market, basically since October 13th, we have seen the QQQ lead the way up, get stronger, quicker, make new highs faster, not come down quite as much as the others percentage-wise of the last rally, for example, or the complete move, etc. So just in the last day or two, today included, is a new high by a slight bit. We are not very far away from highest highs to go all the way back to August. You can't say that about the other indexes. Not that they're not that close, but once you get above the early February highs, the answer would often be yes, or a much greater time frame. All right, so it's already closed the gap on the Qs. We already came down to yesterday's high and not much below. I think there might be 0.10 left. Yesterday we literally had 306.30 for the high, and today's low is 306.40. 0.10 is good enough for government work. Pardon me. So the gap, for all practical purposes, is closed. 0.10 is nothing to speak of. Back to unchanged from where it opened at the moment. If it keeps climbing, you know it's going to pull the other indexes up by their bootstraps, and that's going to be good. We'll see. I can't tell. I still am worried about the gap in the DIA and the S&P. And guess what? On the chart below, we've got the Russell 2000. I'm having a little trouble with that keystroke. And the Russell 2000 has essentially the same problem. Gap still left, not much, noticeable. In an area where it bottomed out before, no problem if we just close the gap and sink a hair more, but not too much more. Certainly not below yesterday's low, absolutely not. And then start to come back up above today's high, and that could be today, I doubt it, but this week. Futures contracts, looking good. We have soybean oil. I've been watching this bullish engulfing that we had yesterday, and I talked about it. So I'm turning friendly in corn. But the problem is we have a lot of resistance at around 58. And this is bean oil. Pardon my French. It's bean oil instead of corn. Now, we need to get above yesterday's high on a closing basis, and that would pretty much cement the bullish engulfing. But the key here is the low of yesterday, which was 56.04, and today's low is 56.10. So we are not hitting the yellow dot just below yesterday's low to get stopped out. This doesn't seem very smart to a lot of people, but what happens if you bought it right here at 56.22 and you put a stop below yesterday's low? Your risk is extremely small. I agree, it doesn't look like the right thing to do. If the trade still works, the signal of yesterday still works, and it hasn't failed completely, don't like what it's doing at the moment. But if it does work and you're not stopped out, you have an extremely small risk and a much better reward potential. I like that. But you got to have some decent reasons to jump on board in this ballpark price. Next chart. Natural gas. Boy, it just nicked the previous green bullish engulfing that we had at February 22nd. Are we in the process of making a double bottom? Well, this is how they start. I don't have any reversal. I don't have much evidence. We're not even oversold, but we're down there. So I need to see some rally immediately in order to start to talk about a double bottom that I've planted in your back of your head already. Next chart. But it's unlikely until it starts to do a little better. Next chart is heating oil. We started to break down, but at the same time, we got oversold. So this little bounce the last couple of days was not a shock. The trend is down. We got lower lows. We got lower highs. In fact, the last high was a bearish engulfing ER sell signal. A really good one. Backed up by another one 3 days later. Both of them work great. So obviously I'm bearish. I'm not changing my mind unless I have a really good reason, and there's no real good reason. I would be selling short in this ballpark area. Looking for new lows, maybe this week. Next chart. Crude oil, oversold. Should have a little bit more rally back up into this red zone of 71.5-ish. And that might be the beginning of the move down, next move down. It's possible it could get up to 73 or 4. But the problems about a rally start at 71.5, up a little bit more. In no way would I allow it to get above 83 before I change my mind for some reason. That would totally be unexpected. Next chart. Corn. Oversold. went sideways, oversold. Now we got a good bounce, but it was right up into resistance, or the beginning of it, and couldn't close above it 2 days ago and today. And it looks like it's going to close lower. So we have a little bit of a reversal, but I don't trust these common reversals. They really don't have a good history of being reliable. But at certain points, like a little double top here, it's more interesting. Next chart, going down. Silver, gold, and platinum, here we come. Yesterday, a new high for the trend after we bought the bottom of the silver market and had two warning bullish, not working very well, but there was still money to be made in those two signals. This one's the whopper. This one's the low so far. Today is a down day. We got very, very close to overbought. So not a surprise. We're having a little bit of a dip. I would think maybe around 22 or a hair under. The next couple of days might be a good area to look for potential buying. Next chart. And I'm bullish on the metals. We caught the bottom of the platinum market also a few weeks ago. So far, it's been a few days since we had a higher high, but we haven't had any lower lows. Today, lower than yesterday. The trend line goes up across the bottoms and up across the top, so there's somewhat of a channel here. I like the way it looks. You're at the bottom of the channel. RSI is neutral. Could be a decent spot to be interested on the long side, as long as you manage your risk. Always, always, always manage your risk. Think about where you're going to get stopped out if you are wrong, and you're going to be wrong sometimes. Next, gold. Bullish engulfing on the first low and the lowest low of a double bottom formation. And yesterday we had a higher high again and an interesting longer term upside breakout. But guess what? It's been overbought for several days, and quite overbought. Got up to about 86, which is fairly high. above 90 is insane, and above 95 you hardly ever see. So in the high 80s is very overbought, period. Now, finally, we're starting to have a decent downside correction. So I'm looking for a place to be a buyer. 1925, starting, and maybe even down to 1875. Next, we have 10-year notes and bonds. Look at the 10-year notes first. Yesterday, it came up almost exactly. Frankly, could have been exactly. I don't care. So close it doesn't count. To the previous rally high, which was overbought, and that was back in January 19. Again, we're overbought and banging against the same exact price. So closing lower yesterday, so what's called a common reversal. Again, they're usually not reliable, but for heck, double top, overbought, and a lower close, give me a break. So we're down today a chunk. No damage done to the situation, which is that the long-term bottom being built. We're looking for a major upside breakout, and frankly, that's closing above yesterday's high. That would be a new high going all the way back into September. So I'm going to love that when it happens, and I do think it's going to happen. I'm going to try to tell you it's going to happen before it happens. We'll see what happens. Sorry about that. Bonds, same story. Right up against resistance, not quite as accurately, but super close. Overbought, downside correction, no harm done. Looking to be a buyer in a dip, maybe down to 126-ish. Next chart. Soybeans, and I'm getting into a few symbols that I really don't care about at the moment. Forex, got to follow through on some signals here. We got the bottom of the break on the euro dollar, almost the bottom of a triple bottom, which is fairly rare to begin with. 3 lows at almost exactly the same price over a relatively short period of time. Today is a higher high for the time frame since we had 2 buy signals at the beginning of the bottom formation. I can't claim that the signals were the greatest. They're not, but there are 2 of them there. Next chart is the dollar index. You would expect to see the exact opposite. We only had 1 sell signal. It wasn't anywhere near as accurate, but it is making new lows while the euro is making having strength. The next one is the yen, which we had just a few days ago a new sell signal. It did have the retracement the next day or 2, which is just great. And 2 days after the signal, you have a new low and a new low close. Yesterday, we got oversold with a new low and a new low close. So today we're rallying a little, no big deal. A little bit further, probably end up being a minor high. Down you go. Next, sector symbols, important. The banking sector obviously got clobbered big time. And I hope we find some red bearish engulfings here in the last 1 or 2 months. That would be great in some of these banking indexes. And KBE is our first one. The second one is, and no great sell signals before it crashed, not and that one either. But we have a buy signal 2 days ago. It came super close to getting out, and today we're up a little bit. Now, you know, S&P is still hovering around 3 higher on the day, not really rushing up to 4, 5, 6 higher, which I would love, or dipping down a little bit to a little bit higher yesterday's high, and then turning up. So we'll see what happens while I'm yakking away here. All right. Bullish engulfing, bottom of the index here, which is the financial S&P financial. I got one, don't I? Just coined a new word, financial index, the sector. So we got a buy signal on one of the financials, looking good, gapped up. I want to see a high higher than the green days high 3 days ago. We'll see what happens next. And XME. Metals, metals and mining in general, rallying nicely, not the precious metals necessarily. Next index. We had a buy signal a few days ago that didn't work. We gapped down for 4 days and now gapped up. This is called an island bottom when you have price action isolated on the way down and also on the way up. But they are almost always a single day's worth of activity. To see one that is 4 days in size is about as rare as a snowball and you know where. So I am expecting this to come down and close the gap. We'll see. It could be a 4-day island bottom, which it is at the moment. There's a space between the high 4 days ago and every day since except today's low. So that creates a gap. We'll see what happens next. Again, next chart. We gapped up a little, not quite the 4-day island bottom, but yeah, not too far from it. Looking good, but it was oversold, so it deserves to rally. We had a buy signal yesterday, the day of the buy signal. It's a bullish engulfing with a oversold condition within the allotted number of back days. Now, XRT is a retail spider index sector. I like what I see. The bullish engulfing is working immediately. Can't complain with that. XLK, about to break out to the upside. No particular signal, but also watch out for it being overbought. On the breakout, it's going to get overbought, and then you probably have a little follow through and a retracement back to the overbought area. Next, bullish engulfing at the bottom several days ago. New high by a small amount this morning, around unchanged at the moment. What can I say? It's working, but a little slowly. And that's it. I'm done. Have a great trading day. Talk to you tomorrow. Hopefully higher in the indexes.